Good morning and welcome to Earnings Edge right here at NDTV Profit. We're tracking Ashok Leyland right now on the back of this strong quarter for earnings, and I'm now joined by Mr. Shenu Agarwal, Managing Director and CEO, and Mr. Gopal Mahadevan, the new Director of Strategic Finance and M&A. Good morning and thank you for joining us, sirs. I wanted to just start with congratulating Mr. Agarwal, and if you allow me to start with talking about his new role, and just wanted to talk about the move, what's the thought process behind that?
See, it's a very exciting role that I'm moving into, and I'm looking forward to working with the entire team of Ashok Leyland and its subsidiaries as well, because the role is of being a director of strategic finance and mergers and acquisitions. I would personally be focusing a lot more on strategic finance at the Ashok Leyland group level for funding some of the subsidiaries as well as looking at M&A opportunities. So I'll be involved a lot more in the collaboration that the subsidiaries can have with Ashok Leyland and what are the multiplier effects that we can have, and supporting the management team of each of these subsidiaries, because these are also, independently managed. But today we are at a cusp where the valuation of these subsidiaries can start, becoming significantly more. And that's why, I'm taking up this role.
Now, for the year, the numbers for the EBITDA are strong, coming in at 12%, and profitability is also up roughly 90%. I wanted to know for MHCV sales, they've roughly been flat but have gained market share as well. How do you assess the financial year overall and any kind of commentary that you might have?
So I think FY24 was a record year, and it is a little bit special as well because it happened in our 75th year. I think in terms of margins, of course, it's a very good year for us. As I said, we have created records not just in the overall revenues but also in EBITDA as well as in PAT. EBITDA margin, what we clocked was 12%. I think what makes us more satisfied is that the journey of EBITDA margins that we carried throughout the year. We started Q1 with 10. And before start of the year, we had thought that we will do double digit in the whole year. But when Q1 we could do 10%, that gave us even more power to improve further. And then Q4, we ended at 14.1. So margin was a good story. I think we could. It was a pretty all-round performance because it is not just one vertical, but all the 5 or 6 verticals they fired at the same time. So power solution business, we had 40% plus growth. Defense business, we could more than double it in FY24. Even IO business, where the markets were kind of subdued, especially SAARC and some parts of Africa, we could register about 5% growth even in our IO volumes. LCV, we had a gain in the market share, while the industry was still kind of subdued a little bit in FY24, but we could kind of register some improvement in our market share. And bus segment, we have been number one. We have regained that number one position now in FY24 with a massive increase in market share. And now we are close to 38-39% market share in buses. So I think overall, everything worked well, whether it is the mix or our ability to fetch better prices or our ability to cut down on the cost.
Now, I want to talk about the LCV divisions. The sales have largely been flat, roughly just a 3% growth for the year. But you have said that you've gained market share roughly 5.8%. Now, in that case, is that because the market leader has shown certain weaknesses, or have you taken share from the smaller players because the industry volumes have largely been flat?
Yeah, so LCV market, as I said, market did not grow last year because of some factors. But we were able to maintain our volumes, and that gave us about 0.8% growth in our market share. Going forward also, we think LCV has a lot of opportunity for Ashok Leyland. One thing is that we are just about 20% market share. The second thing is that we are only playing in about 50% of the overall LCV market, right? So from both sides, growing in our current addressable market, in market share beyond 20%, and also coming up with some new products which will increase our addressability of the total market. So LCV, we are very, very buoyant on. Even in FY25, we are planning for 6 major launches. The first one will happen in May, and then every alternate month we'll come up with a new product in the LCV segment. So things are looking bright for LCV.
So just to re-emphasize, so largely you have taken share from smaller players or from leaders as well.
So we have displaced, the incumbent at number 2, and we are now number 2 in the LCV. When I say LCV, since we are only addressing 2 to 3.5 tons, so that is the market we have now displaced the existing number 2, and now we have assumed that number 2 position.
Now for MHCV, we have seen slightly tougher market, but we are moving up the higher tonnage chain. Are there any inquiries for customers for the same? And generally, we have seen that elections are a problem, but for a company like yours, which has multiple products as well as multiple addressable markets, such a macro issue, does it have any kind of impact? Just wanted to talk on the higher tonnage as well as on elections, any kind of impact that you might see.
Yeah, firstly, let me talk about FY24 in the context of MHCV market. See, I'll give you a different perspective about FY24. A lot of people think that FY24 was a tough year for MHCV, but we don't believe that. If you split the whole year, FY24, into 2 parts, the first 8 months and the last 4 months, you see in the first 8 months, the market was growing at the rate of 8 to 10%, which was very healthy growth. Only in the last 3 or 4 months, the market started degrowing, and there was a specific reason of that degrowth, which was that in the previous year, starting April 1, there were OBD2 norms that were coming into place. And a lot of people had this notion that because of OBD2 norms, the cost will significantly go up. And therefore, there was a lot of pre-buy. In the previous year of last quarter, there was a lot of pre-buying. And therefore, in FY24, we were working against a very high base. And everyone was expecting that the market would degrow because of the high base. Yeah, but if you exclude that 4-month, 3-month period from FY24, and you look at just first 8 months, the market was growing at 8 to 10%. And then April again this year, market has grown by about 10%. Right? So we actually think that this whole notion about that FY24 was a bad year or a tough year for MHCV is not right. We think we are actually continuing the growth momentum of FY24, the first 8 months, into April as well. Now, coming to elections, of course, before the start of the year, almost when elections were announced, there was a lot of anxiety that elections would have a negative impact on the industry. But I think April proved it wrong. April was 10% growth over last year, April. And therefore, there is really not much of an impact. I think the reason is that, the way country is going, the way the country is projected to grow in FY25 and beyond, there is a lot of positive sentiment on the ground. Even right now in May, we are seeing a lot of positive sentiment, very strong sentiment on the ground. So we are very optimistic, actually, about MHCV and LCV both for FY25, not just for the whole year, but also for H1.
Now, one follow-up on what you said, we will move away from BS4 eventually towards cleaner emissions going forward. Do you expect another round of pre-buying whenever that happens? Because the pre-buying generally happens 6 to 8 months before the norms come into place. So any kind of feedback you want to give us?
No, our industry is not going through any emission norm change anytime soon. So the BS7 norms are not yet notified. So they are not going to happen anytime soon. Even when they are notified, government normally allows a period of 3 to 4 years for manufacturers to get the technology ready. So there are no emission norms in the immediate future that are going to hit us.
Now, I just wanted to talk on the structure since OHM Mobility has come into picture, just to understand a bit more on how and what kind of structure is the company following. There are some contracts that will move under OHM Mobility.
Yeah, so, the purpose of OHM being formed was to ensure that it, kind of runs the business of e-mobility as a service, which means it acquires the buses, and at a later point in time, we are expecting that even light commercial vehicles will be procured from Switch India, and then it will kind of, give it out as an operating, technically, it's a long-term operating lease, so to speak, right? So buses typically are 10 to 12 years, mainly on STUs. Light commercial vehicles will be a little lower, so significantly lower. So this is how we have actually structured the business so that the OE bit of it, manufacturing and sale, is differentiated from the buy, own, operate, and lease model. This will, of course, require financing, both in terms of equity and debt, and which is what we are readying the company for. We have invested 300 crores last year, and that should take care of some requirement given the debt equity ratios that this company can raise. But as we move forward, we find that the businesses are going to be a mix of both operating leases as well as purchases. So we wanted to ensure that we have a foothold on both these operating models.
Now on Switch, we have seen strong order book. What's the current order book? And is this only in India or as well as in Europe?
Well, we have, at the moment, the order book is around 1,500 buses. And, this is across STUs. And, we have successfully supplied to various STUs in the past. Uptime of these vehicles are 98 to 99, even upwards per 99%. And these buses are flying extremely well. They are setting standards for the industry as well. So these orders are predominantly in India. All of them are in India. I think Switch India has become a big focus for all of us because the market here is actually growing in a very methodical manner. Where there's government support, state transport undertakings want to actually ensure that, the cities are a lot greener. So they want to replace the diesel buses with green electric buses. Thirdly, the government itself is giving a gentle nudge on scrappage of old vehicles. So I think there's a lot of potential that is Indian market is offering. At the same time, Switch UK, which possibly would see better opportunities as time lapses. We are getting ready for an international product to be launched later part of the year, which is called as the E1 bus, which is to cater to the UK and the European markets. So these are extremely low floor, sophisticated buses, electric buses, and we would like to make some sort of a foothold even there in the European markets.
Now, my next question, sir, is on the e-bus tenders that we've seen in India under the PM e-bus Seva scheme. We have seen a couple of players, but largely big players have been absent because of the two key issues on payment security as well as the asset-heavy model of maintaining the buses. There has been some improvement in these reported by the other players. The government is changing the stance. Have you been participating in these tenders? And going forward, do you think that there will be more participation which will come with the push of this particular scheme?
I think so. We are participating. We are also, broad-basing our product portfolio, which is happening during the year to ensure that we have a larger share of the addressable market. This is going to happen through the year. The third bit of it, as to your question about whether this PM e-bus Seva, the payment security mechanism, is it going to add a big fillip? I believe it will. We believe that it will be a big fillip because, see, as I mentioned, these are 10-year contracts. Yeah. And what do bankers want? Bankers want payment security. If established OEs like us who have had experiences in manufacturing and selling buses are able to operate this, we are very confident of operating these buses at the expected levels, or in fact even exceeding beyond that. So once this happens, this becomes like a very capital light model for state transport undertakings. Because today, one of the challenges that state transport undertakings have is capital. So they don't want to go in for an outright purchase because these buses are far more expensive than a traditional diesel bus. But where these electric buses win is because of the extremely low operating cost, right? So, and the preferences of customers are also becoming that they want to have a smoother ride, air-conditioned comfort, less noisier, less polluting. So I think that with the payment guarantee mechanism being established, this would actually add a fillip to the entire EV bus market.
Now, the company has been strong on launching CNG models, and I also wanted to talk about the other alternate fuels. We have seen strong sales in April, and the company has also launched the e-Comet, as well as the Boss EV, which was shown in the Auto Expo. Just wanted to ask on the company's EV strategy among push from competitors, how are you seeing the market?
Yeah, we are actually very happy with the progress we have made in the last few years on our alternate fuel strategy, which is not limited to just EVs, because we think other technologies also have a significant potential, especially in the medium and heavy trucking. So we have delivered our first ever battery electric truck from Ashok Leyland, in the last few months, which is a 14 to 18 ton Boss electric vehicle. We are now almost ready with our 55-ton tractor-trailer fully electric vehicle, which we are going to deliver in the next few months. We have also delivered our first ever LNG trucks, to one of the entities, which is Mahanagar Gas Limited. We are also ready with our 9-meter fuel cell bus. We are just waiting for a signal from our customer to deliver those. The buses are totally ready. We are also now getting, very soon we are going to get ready with our 12-meter fuel cell bus. That will be delivered in later part of the year. So in nutshell, I would say, we are very happy with the progress because now we have an entirely new and complete portfolio of alternative fuels, whether it is LNG or hydrogen ICE, or it is CNG, or it is fuel cell, or it is battery electric. We have a complete portfolio ready and either already in the market or going to be in the market very, very soon.
Now on defense, the opportunity is large. The company has grown 2x from the previous year. Any kind of slowdown in trending due to these elections?
No, there is no slowdown at all. On the contrary, in FY24, we could more than double our top line on the defense business. And not just that, our current order pipeline and the visibility for the future is very, very strong. I mean, we even think that we might be able to again double our business in the next 2 to 3 years when it comes to defense.
Now, my final question, sir, for a two-parter. For Switch, you have mentioned ongoing conversations on external investment. Any kind of outlook you want to give on that or for the longer term? And another question on capacity. What would be the next level of capacity expansion? Would that majorly be brownfield?
Yeah, so as far as Switch is concerned, while we will pursue to have external funding required, it's not out of necessity of funding. Last year we put in 1,200 crores. Our balance sheet, Ashok Leyland balance sheet, is very, very comfortably placed. Other than our own capex requirement, the only funding that is required now is for Switch. Otherwise, all subsidiaries are, as you know, very, very self-sufficient. In fact, I know I'm branching off a little bit, but Hinduja Tech, which is an IT, technology services company for us, that has raised capital from a third-party private equity for 50 million just about 2 months ago. So here in Switch, we will continue to fund, we will continue to build the business, and this is very important. Actually, this is commercial vehicle business that we are investing. The only thing is it's electric, while the main one is in the main diesel business is housed in the parent company. So for us, actually, there is no differentiation. But why we wanted to kind of subsidize it and keep it separately is because the way electric business has to be managed and way the diesel business has to be managed is slightly different, and which is why we had a separate team taking care of this business. When we are able to build and invest and build value into the business, we will certainly try to raise capital. But at the moment, it is not a necessity. We are not going to raise capital as a necessity. We would like to raise capital if we are able to find the right strategic partner who would want to grow and build the business with us.
Just to add to that, I would like to say that Switch India has turned EBITDA positive in the last quarter of the last fiscal. And even when we look at the Switch India's plan for the current year, we think Switch India would be able to stay EBITDA positive even for this year. Yeah, so to that extent, now there is hardly any need for funding any losses that they make on business from a business operations. The only investments that would be required would be for future product development.
Now, you spoke on Hinduja Tech. What about the other subsidiaries? Because you've seen Hinduja Finance has become a sizable business as well. And the second question on the EBITDA performance, we've seen really strong performance, and the company has been running cost management programs. Any kind of range that you could give us going forward?
So I'll take the one on Hinduja Leyland Finance. I think Hinduja Leyland Finance, along with its own subsidiary, 100% subsidiary, Hinduja Housing Finance, have been doing exceedingly well. Hinduja Housing Finance has a book of almost 10 to 11,000 crores, and put together, the overall book is nearly 58,000 crores, and 50,000 crores. I think the ratios of Hinduja Leyland Finance is pretty good. I mean, the GNPA, NNPA are very much within range. The capital adequacy is almost 17.5% to 18%. So they have their own trajectory for growth. And what is the most important to note is that that dependence on commercial vehicle, like you rightly pointed out, is getting lower and lower, which is good for the business. So today, commercial vehicle industry business as part of the book must be anywhere between 33%. The rest of this is, two-wheelers, three-wheelers, off-road vehicles, and then you have got a loan against property, and then we have also got special purpose papers that the management keeps either buying out portfolios, etc. So we are very, very, very comfortable and happy with the growth that Hinduja Leyland Finance has been posting, very stable, operations, and we would certainly like the management to keep continuing the book.
Well, thank you so much to both of you for joining us today on Earnings Edge at NDTV Profit. We wish you the best for the next financial year and look forward to our next conversation. But thank you so much for joining us today, sir.
Thank you very much.
Thank you.
Well, that's all the time we have here on Earnings Edge. Stay tuned to NDTV Profit for more.